Can I get a loan modification on a second mortgage? Have you ever wondered if it is possible to modify the terms of a second mortgage? If you are facing financial challenges, this question is especially important. Let's break down the details surrounding loan modification options for second mortgages. Yes, you can get a loan modification on a second mortgage, but there are specific conditions to keep in mind. A loan modification involves changing the terms of your existing loan to make payments more manageable. This could mean extending the repayment period, lowering the interest rate, or even reducing the principal balance. While these modifications are often more common with first mortgages, second mortgages or home equity lines of credit can also be modified. To qualify for a second mortgage modification, you typically need to show that you are experiencing financial hardship. This means you must provide documentation that demonstrates your inability to keep up with current payments. Common documents include income statements, hardship letters, and financial records. Your lender will evaluate this information to determine your eligibility. In some cases, government programs can assist with modifying second mortgages. For example, the Home Affordable Modification Program has specific protocols for modifying second liens. If your first mortgage is modified under this program, the servicer of your second mortgage may be required to offer a modification or accept a lump sum payment to eliminate the second lien. This can simplify the process since you may not need to submit additional documentation for the second mortgage. However, keep in mind that modifying a second mortgage can be more complicated. Lenders view second mortgages as riskier because they are paid after the first mortgage in the event of foreclosure. Therefore, lenders may be less willing to modify terms unless they see a clear benefit or are compelled by specific programs. Considering bankruptcy as an option, loan modification can be a valuable alternative to filing for bankruptcy. If you can successfully modify both your first and second mortgages, you may stabilize your financial situation without resorting to bankruptcy. However, if modification is not feasible, bankruptcy can offer protections and options to restructure or discharge debt, including second mortgages, depending on the chapter you file. In summary, loan modifications on second mortgages are possible, but they depend on lender willingness and your eligibility. You must demonstrate financial hardship and provide necessary documentation. Government programs like the Home Affordable Modification Program can help modify or extinguish second liens when the first mortgage is modified. Remember, while loan modification can help you avoid bankruptcy, bankruptcy remains an option if modifications do not work out.